Welcome back, everyone. I received multiple requests on Friday for my thoughts or breakdown of Cameco-related conference call and events. Now, there are a lot of takes out there. Some are pretty good. Some are pretty good. Anyway, here's mine. First off, I do want to say that before you are concerned or listen to what I have to say about the call, I highly recommend that you listen to the call. It's very easy. It's completely free. It's on the Cameco's website. You go there, go click invest, click replay webcast. Very simple. The presentation itself is about 18 minutes, and then there's another maybe 20 minutes of questions, all in all, plus the introductions and everything. 45 minutes. Really worth your time. And that really brings me to my first comment about the call. So I listened to Q3 conference call a number of times, and I listened to Q4 live plus a few more times since then to get through some more details when making this video and to check on things. And I have to say that Q3 and Q4 were very similar. And you don't have to believe me here. I mean, you could check it out for yourself. Just the presentation part. I mean, just when Mr. Gitzel's going through the slides, you can see. So while it sounded good, and I don't dispute any real points that were made, it is very similar and a lot of the same commentary and points and outlook from the last quarter. And in my view, that is probably a big reason why the market was so excited during the call and at the open and then quickly faded. I believe that this is largely because most of what was said has already been talked about for a long time. The tone of the call was generally optimistic, and you could see there was a title, and then someone asked a question at the end about growing optimism. You sound more optimistic? And they sounded optimistic, sure. I thought they sounded decently optimistic in Q3 as well. But again, they talk about long term. Everything is very long term oriented for them. So I think we're getting to the point where they're they've ran through their big overstock of inventory that they had in 2017. They've they've done most of what they said they were going to do, and they have definitely kept to their strategy, and it makes sense, and they're moving forward. I understand why they were optimistic. Despite their optimism, however, they mentioned that they're not yet ready to restart MacArthur River, which is one thing I was watching for. They are investing in automation and cost cutting, and they did, interestingly, increase their Capex expectations for 2020 over 2019. 2019 was 75 million, 2020 is 120 million. Now they qualified this as investing in automation and in their existing mines, and also their Vision in Motion project at Fort Hope was getting some investment this year. If indeed Cameco is not restarting MacArthur this year, that means a number of things. But the first of them, and this was probably true anyway for this year at least, is that they will be a big buyer on the spot market. They said that they will be buying 20 to 22 million this year and the majority of that will be on the spot market. Now, the spot market is very opaque and very interesting. Let's go with that as a nice way of saying it. Trades about 50 million pounds a year, 60%, so 30 million pounds is trader churn, meaning the volume in the spot market that leaves the spot market is probably about 20 million pounds. Now, I'm not saying that Cameco would have to be all of it because they can get just under 5 million pounds from Inkai, and they probably have a number of off-market discussions and contracted pounds that they will be receiving not on the spot market. However, I just love personally how they qualify themselves as the biggest buyer in the spot market, and they are clearly relying on spot market material. They do have a little bit of inventory that they could draw down. They do have some material that they could borrow, but they qualify themselves as, well, needing to buy a lot of uranium. And they also say that they're unsure of the materials there, which is just exactly what you want to hear if you're a utility. And that's sarcasm, but it's not, it is exactly what you want to hear as an investor, and that's not sarcasm. Because you see, it seems to me that Cameco has put themselves in a position where they need to buy basically half of the uranium that leaves the spot market, maybe half of or more of the uranium that is mobile and available. And they seem to be doing this or implementing this strategy in a way that half backs them into a corner, and it doesn't completely back them into a corner because they have other ways of procuring material, borrowing, whatever they could produce from their own eventually. But they have said that if they view there to be a shortage of material, that they may accelerate buying and buy more than they need. And the way they're delaying purchases seemingly longer than they were supposed to kind of feels like they want to put themselves in that position where they will be the one to potentially be driving up the price to an acceptable level. And I've said this in the past, and I will say it again here. If they wanted to keep the prices at a point, let's call it $50, where only they and Kazatomprom could make money, they sure have an interesting way of going about that based on how they put themselves in a position where they basically need to be chasing the last pound at a certain point. And the last thing I wanted to say on spot, and really just to qualify my prior statement, is Cameco does definitely want to buy as cheaply as possible. Okay, but the situation that they're telegraphing themselves into is that they're putting off, like, look what they said. They said the bulk of their purchases will be in the last 3 quarters of this year. Look what last year they drew down inventory. Everything is pushing things out. So once they get to the point where they believe the spot market is depleted or almost depleted, they set themselves up to be that mad grab to try and grab the last of the material. So it looks like that is the type of thing that would cause a quick move when the turn comes. Does it have to? No, but it's looking like it. Now, another point that they made in Q3 and then in Q4 was that their balance sheet is strong. And I agree. I was talking with someone after the Q3 conference call saying how it seems like almost all of a sudden their balance sheet looks good again. And now they even have net cash, which means more cash than debt, so they could pay off their debt and do more. Now, they are hoping to get even more cash from legal settlements that should be, in their view, should be settled soon or eventually. And so with that, if the price of uranium is still in this environment at that point, I would think that they would have the ability to maybe make an acquisition if that makes sense for them. If it does not, or if they think that maybe it would be better to spend some of the added liquidity to maybe contract forward and secure more pounds in the future via buying them from on contracts from other producers, that I would say is another option that could give them even more strength down the line when they have more of their own pounds to contract rather than uh, using all of their pounds in the contracts that they're signing today. And one thing I found was interesting, and this is purely speculative, but they did comment that the bulk of their purchases will be in the last 3 quarters of this year. So maybe they're hoping that they won't move the market and that some of this money that they get back could be used on something productive before the market moves. I don't know if that will mean an acquisition. I'm not 100% convinced I see something that makes sense for them to buy. But then again, there's a lot of assets out there that are probably at an attractive pricing point in the cycle. So we'll have to see what, if that's their goal, what they do with the cash. Now, I like Cameco and think that they are well run and have some very, very high quality people in charge. And that's not to say that I think that their strategy is completely foolproof or without question, because looking in isolation at a lot of the things they said, they make sense and they, make sense, are smart. But looking together, here I will not read but paraphrase a few of the things that they have implied and let you see if they make sense together. We're not sure there's enough material on the spot market. We prefer to wait longer or put off purchases when we need. A top priority is fulfilling contracts. Here's my personal favorite. If there's not enough material, or if we're not sure if there's going to be enough material, then we're going to try to buy more than we need. Also, we noticed that in conversion, when the price moved sharply, some of the availability of the supply disappeared. Now, one thing I did want to kind of tack on here and address is I saw some people out there comment that they and a number of other people never really understood Cameco's strategy. And personally, I wasn't really aware that this was something that required explanation. I always thought it made sense. Cameco had promised uranium, and so they decided that instead of facing a situation where they were depleting their asset to produce uranium, they would just buy from other desperate sellers and save their asset, make money, reduce the risk, and take some oversupply off the market because the market was for a while oversupplied. Now, Cameco has big assets, so it makes kind of tapering it a bit complicated. But if one were to say, well, why did they do that? Well, if the market was well supplied, why would the utilities be forced to go to Cameco to pay premium prices? Because look back a few years, there was plenty of uranium everywhere, and the market was fully supplied, and so there was really no long-term plan for Cameco, and they had a crappy situation and they flipped it on its head. Some people also might say that given Cameco's tone or what they're doing, then they anticipate a difficult 2020. I disagree because yes, Cameco is de-risking, so that's not being aggressive and expanding capacity. And they did mention that they would be having thinner margins, and they were investing in a number of new initiatives and cost cutting and things like that. But for me, what are they supposed to be doing with their profits? If they started investing in new capacity, that kind of sends the wrong message. They could make some acquisitions, but really with net debt at, well, from some net debt to some net cash, I'm really wouldn't be looking to go out on a big spending spree. So personally, I don't view it as a sign of a terrible 2020 or whatever. That doesn't really make sense. What I don't really see what they're supposed to be doing with their money in this environment. Personally, I wouldn't be paying a dividend. I would have got rid of the debt a bit sooner. I mean, I know they have to pay a dividend, or they expected to. Could make an acquisition, could contract for some more supply, but really, what big spending are they supposed to be doing? Thanks for watching, everyone. That's all I really have on this topic for today. For now, it is a slow roll, but it is moving in the right direction. And so that's all. Have a great day.